Hey, Bill Soriano from Pittsburgh, and it's Thursday, February 15th, about 8:02 p.m. So I posted a trade here. That was just a crazy thing here. Earlier today, I opened up my demo account, which I haven't been in for a long time on my Android phone. And as soon as I opened it up, I took a snapshot. I took a picture of it. And for some reason, I don't know what happened here, but there was just a huge mistake here. And it was showing a $2 million gain here. So obviously that was a mistake. And that was in my demo account. The reason why I opened that up was because I wanted to take a trade today in my demo account. And that's what I did. So I took a 10 lot trade in my demo account. And I got 15 pips on the trade, or $1,207. And, I'm just saying here today, I took a trade on my demo account today to show that I can do that too. Yeah, I can post winning 10 lot trades here in my group, but it doesn't mean jack shit. Why? Because when you look at this trade in a second here, you'll see that the stop loss was probably going to be 30 pips. And on that trade, there was no way I would put $3,000 of my real money at risk, unless, of course, I had $100,000 in my live account, which nobody I see posting here on Facebook has. So the point is, demo's not real. You do things on demo you would never do with real money. There's no emotion attached to it. So your decision-making process is altered when you're using your live account. That's why, people will go here and they'll post, they'll take this trade here, and there's other people would have taken like 10 one-lot trades right in a row, and then the last one they would have taken was they were taking like 10 one-lot trades, single lot trades, and then the last one would have been like 10, 20, or 30 lots, and then they would have showed this enormous gain for the day. But again, it doesn't mean jack shit because it's a demo account. And also, guys, remember, there's ways using an Android phone for a person to make it look like they're making an actual withdrawal from a demo account. There's ways to do this. You can Google it and see, but there's ways to do it where you can make it look like you're making a withdrawal from a demo account, so as to try to convince people that it is actually your live account, right? Because you obviously can't take a withdrawal from a demo account. It's not real money, but there is a way to do it with your Android phone to make it look like you're doing it, so that you can try to make it look like your demo account is your live account. So there's all kinds of things out there that people do, guys. But I could take a 10 lot trade. I can get 15 pips, $1,207. But again, it doesn't mean anything because I would have never been able to take that trade unless I had $100,000 in my live account, which I don't. And I doubt that anybody that's posting these images like this on Facebook does. Okay, but anyway, let me show you the trade because it was a good setup in GBP CAD. It wasn't, I didn't just pick a random currency and decide to go short or long. It wasn't a valid setup. So here's GBP CAD, and this was kind of looks like the fake out move that I got caught in the other day. I think on Tuesday it was, where I seen a vector move up, and I took a short position, and then it just blew me over, right? And the same thing happened here with GBP CAD today. The only thing that kind of saves you is if you go to the 1 hour chart, you can see that as it's coming out of here, it's kind of in an uptrend. Right here when you see it coming out of the right here, you see it coming out of the Asian session this morning, and you could see that it's kind of in an uptrend. The 50 days above the 200-day, moving up. So that would tell you in a vector, if you're looking at a vector trade, that would tell you not to take that as a short because the trend right now is moving up. So what you're looking for here then is the counter trend trade after it makes its move, right? So if you look at the ADR value, the average daily range of GBP CAD is 145. So if you measure here from the beginning of the day, the lowest point of the day here, up into that highest point, you get 147, 148 pips. So it does meet the requirement. It does make a move up equal to or greater than its average daily range, right? You can see that you have at least 3 clear moves up here. You have at least 3 clear pushes up with this. And then when it gets to the top here, it forms a real quick M at the top, and then it drops. And then your entry point is actually right here. Okay, so this is another thing that makes this trade a little bit risky, I want to say, if you're using your real money, because this candle here does drop about 20 pips. So, you know, it's a hard decision to jump in like that after a candle's already moved 20 pips. Sometimes, even though you're not supposed to, when you see this candle moving down after it moves up here and pulls back, you can get in at some point during this candle. But even if you wait till that candle closes, guys, remember, counter trend trades, we want to take them back to the water, right? That's exactly what this does. Look, 1, 2, 3. You got 1, 2, 3, 4 15-minute candles right down below, right down to the water, a little bit below, and then boom, it shoots right back up. So your job on a counter trend trade is to get in right here, take it to the water, 34 pips, right? So with the spread, you're going to get at least 25 to 30 pips on that. And, you know, I ended up just getting 15. I think what happened was I didn't look at the account until it started moving up here, and I think I got out on this candle right here. So I ended up with the 15 pips. But again, I wasn't watching it real close because I was just trying to show that, you know, I can take a 10-lot trade too in my demo account and show a huge profit. But again, doesn't mean jack shit. So anyway, tomorrow is Friday, and I will be taking a trade tomorrow. You know, a lot of times, you know, I'm a big fan of Steve Morrow. You know, I took his training, the market maker method, and you know, great training, guys. There are, you know, I'm sure Steve Morrow was taught this method by someone. You know, he didn't invent the method, but he perfected it. And as far as being the first one to take the method and sell it in a classroom setting, like, you know, live classrooms, as well as webinar, online recorded webinars, he was the man that did it. Now, there are a lot of people out there, a lot of people that copy his training. They make videos similar to the videos that he's made, and, you know, sometimes they try to pass it off as their own. I don't have a problem with that. Whatever you want to do, that's not my business. That's, you know, a problem for Steve Morrow, you know, if he wants to deal with it. But what's confusing sometimes is people like to change things. They like to add their own stuff in there. Like in one such instance, I read that maybe we shouldn't take trades on Sundays and Fridays because those are trap days. And I just need a few more minutes of your time here, guys. I'm not going to hold you much longer, but trap days. And I'm thinking to myself, well, the whole basis behind Steve Morrow's theory, his training, his vector strategy, is that, yes, the market maker tries to trap you. He makes a false move to try to trap the traders, and then he moves the currency in the other direction. So the whole basis behind the vector strategy is that the market maker is making trap moves. He does that all the time, not just on Sundays and Fridays. He does it all throughout the week. That's the whole basis of the vector strategy. So why would we not take trades on Sundays and Fridays if, in fact, those were the days that he's going to do that? The market maker is going to do that. Now, so I mean, it's just, and if you look at the trading, the charts on Mondays and Fridays, you know, there's many opportunities to trade, many opportunities. Anyway, again, this is Bill Soriano from Pittsburgh. Until tomorrow, let's make it a great day trading Forex.